I'm always worried about this big macro wave crashing over my head because we're still somewhat in a downtrend.
What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more.
Really, the markets have been really locked up while it's trying to decide what is going to be the next trajectory. And I think, you usually need a catalyst to send markets one way or another. And I think that catalyst is coming very soon in the form of very important company events, company earnings. On deck this week is Microsoft. Next week is Apple. We've got a Fed event, I think the day before Apple announces. So we're going to start learning, how much these companies have been able to kind of digest all of these problems. A lot of these companies are starting to lay off people, which Wall Street likes. They're starting to recognize. So again, the market is a discounting effect. Even if earnings come in bad, the market will be projecting, how much has the company's done to restructure themselves and position themselves going forward, and on and on. And at the end of the day, it just comes down to price. So, whether we have a hard recession, no recessions, soft landing. I think everybody's thinking now, it was, I think 98% of people thought we were going to have a recession. Now I think it's down to about 70%. And that's been part of the problem too, is been positioning. I think in December, everybody was so bearish and, kind of positioned for this bad first half scenario. And now if it comes in a little bit more benign and we see that the Fed is closer to ceasing the increases, you could be caught off sides. And this has been, frankly, for me, the challenge and the difficulties is that I see that there is some constructive price action. I do take shots on the long side, but I'm always worried about this big macro wave crashing over my head because we're still somewhat in a downtrend. And we saw that last week where, midweek, Dow crashed 1,200, S&P got crunched. By Friday, they all recovered, but you're always worried about that big wave coming over your head. And, in the case of last week, it went lower and then recovered. But then, I was worried, okay, the next time it's not going to recover. So it's this constant push and pull, so that if you're frustrated and you can't find things and, you feel like it's just because that's where the markets are right now, and sometimes it's just really an understanding and a cognition of the market environment. I'm always looking for volatility and robust periods where markets are going to go for 3-4 days, 3-4 weeks in a direction. That's when I make all my money. But, when you just go straight sideways, as we have, this is the Dow, just 8 weeks locked up in a range. This is the S&P. This is the NASDAQ. So it's like been pushing on a string. And so every day we look at things and, you take your pot shots and, I'm very twitchy. I get my positions on, and the minute they are in profit, I'm starting to peel out of them just because I'm twitchy. It's like a twitchy trigger finger. It's just because the markets are in this phase. But I think we're going to start maybe resolving themselves. Although I still feel it could be a trap. I think there's more left to the upside in these markets, especially the Qs and the S&P. Dow Jones looks like it may have hit its resistance. So we had this trade-off in the middle of last year where you saw value stocks take off and technology stocks literally go nowhere. So that is the other complication. You can't just say this is the stock market. Is the stock market going up or down? It's a market of stocks, not a stock market. There's huge sector rotation. So 2 months ago, it was healthcare and energy. Now maybe technology starts getting a bump. As interest rates start getting closer to maybe the terminal rate or the end game, then the growth stocks and the other stocks will start getting a bid. And we're starting to see a little bit of that. Now the question is, where does it go from here? I still feel like it's a trap. So I'm kind of like in this no man's land where I feel like there's more left on the upside in the Qs. Maybe we go back to 295 or 300, but then this thing gets banged. Or maybe it doesn't. I mean, some of these markets look like they're on the cusp of a potential breakout. So this is really the conflicts that I grapple with all the time. So let's just take one at a time. You can see that the Dow Jones, at this 34,000, every time it gets here, it's, it's maybe not even a glass ceiling. Maybe it's just a ceiling 2 thing. And, that could be the trigger. I'm looking at some Dow stocks, M&M, AXP, even Boeing looks somewhat extended. So I think the Dow stocks are starting to, reach their max. I like Home Depot. I think Home Depot needs another week. Unfortunately, the options are too expensive. But I'm just going to look at start short Home Depot. But the Dow stocks look like they've hit this resistance. Now the question is, does it handle this resistance, keep sticking around here? And, that's always when we see an area around a consolidation. Does it roll or does it start just, building energy for that next move? But the Dow looks like relative to the others is now, becoming a little bit more neutral, where it was really the sector to take an eye at, to look at. This is the S&P, and we are right smack on this beautiful trend line. And, poised for a potential breakout here. There is this little reversal right here. So anywhere between where we are now and this reversal, which is around 4,300, I think you could still get, I still think you're going to get 4,150 on this S&P. And what do we know? 3,960. I still think you got a couple percent on the upside. And, I always think when, you see a bottom, then it doesn't quite come down to that bottom and then starts sneaking out. This always sets the stage for, something like that. And people are so offsides in terms of their positions that, you could get a FOMO rally where people just aren't in it. And now these money managers got to adjust their portfolios, and you could get one of these things, or you could get one of these and then it's going to look like that. I still think, it's this. And this is why the earnings in the next week, Microsoft especially, I'm focusing on, because Microsoft really drives the IGV ETF. Microsoft, it looks, I'm looking at Microsoft and it's going to have, real consequences for these markets. And then, of course, Apple, February 2nd, I think. And now, lastly, we have the NASDAQ, the triple Qs. And we've been in this long-term kind of wedge here. And again, just like the S&P, you kind of made a low here, you made a low here, and then you kind of made kind of a higher low. And now you look like you're about to sneak out the top of this thing. So we're actually looking at either huge resistance or a breakout. And so this has been the constant juggling act in my mind. Now, I still think you're going to run into trouble up here. Just like last week, you get long and then you have this wave.
Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.